Something is happening in the global economy right now that most people are not paying attention to. And if you are not watching these numbers, you are going to be caught completely off guard. Today is Tuesday, April 7th, 2026, and the financial world woke up this morning with a knot in its stomach. Let me walk you through exactly what is happening and what it means for your money. Let us start with the number that is driving everything else right now: oil. The Brent crude is sitting at $110.50 per barrel. The WTI, the American benchmark, has crossed $113.50. These are numbers that should make every investor, every business owner, every person who drives a car pay very close attention. Why is oil this expensive? One word: Hormuz. The Strait of Hormuz, the narrow waterway between Iran and Oman, through which 20% of the world's oil supply passes every single day, has been effectively blocked for 5 weeks now. 5 weeks of military tensions between the United States, Israel, and Iran. 5 weeks of supply chains being strangled. 5 weeks of energy markets running on fear and speculation. The consequences are already visible. In Asia, there are fuel shortages, rationing at gas stations, lines stretching for kilometers. Airlines are reducing flights and carrying extra fuel on the routes they do operate. The OPEC Plus alliance has tried to respond by increasing production quotas by 206,000 barrels per day. But the market is not impressed, because the problem is not production. The problem is delivery. Here is what the economists are now saying out loud. The word stagflation is back. That toxic combination of persistent inflation and stagnant economic growth that destroyed the 1970s. Goldman Sachs and JPMorgan have both revised upward their probability of a U.S. recession. They now put it between 30 and 35%. Not a certainty, but not a small risk either. Now let us look at the stock markets. Despite all of this chaos, despite the oil shock, the geopolitical tension, the recession warnings, Wall Street closed yesterday in positive territory. The Dow Jones gained 0.36%, closing around 46,670 points. How is that possible? One word: hope. Investors are betting on a ceasefire. They are pricing in a scenario where tensions de-escalate and oil prices come back down. But this resilience is fragile. One piece of bad news from the Middle East and markets could reverse sharply. In Europe, the CAC 40 is trading around 7,962 points, down 0.24% this morning. The broader European market is watching the PMI services data coming out today for Germany and the Eurozone. In the United States, the ADP private employment report and durable goods orders are also being released today, key indicators before the more important PCE inflation data later this week. Now let us talk about the two assets that always tell you what the smartest money in the world is thinking: gold and Bitcoin. Gold is at $4,740 per ounce. Read that number again: $4,740. That is not just a high price, that is a signal. When gold runs like this, it means institutional investors, the people managing trillions of dollars, are scared. They are buying gold because they do not trust paper money. They do not trust governments. They do not trust that central banks can control inflation. Gold is the ultimate expression of fear in the financial system, and gold does not lie. Bitcoin is holding around $68,880. After a positive March, up 1.4%, BTC is trying to find its footing in this uncertain environment. Some investors are treating it as digital gold, a hedge against inflation and geopolitical instability. The fact that Bitcoin is holding above $68,000 in this environment is notable. It suggests that institutional confidence in crypto has not collapsed. So, what does all of this mean for you? 3 points. First, energy prices are going to stay elevated as long as the Strait of Hormuz situation is unresolved. This is not temporary. This is structural until the geopolitical situation changes. Think about how rising energy costs affect your household budget, your investments, and your purchasing power. Start thinking about it now. Second, the stock market is pricing in optimism that may not be justified. If you are heavily invested in equities right now, make sure you understand the risk. Markets can fall fast when hope turns to disappointment. Diversification is not just a theory. Right now, it is survival. Third, gold is telling you something. When gold approaches $5,000 per ounce, it is not just a number. It is the market's verdict on the health of the global financial system. If you do not have any exposure to gold or inflation-protected assets in your portfolio, today is a good day to think about why. This is the world we are investing in right now. Expensive oil, fragile markets, record gold, Bitcoin holding on, recession risk rising, and a geopolitical situation that can change everything overnight. Stay informed, stay diversified, and stay ahead. Subscribe to Investopia for daily analysis of what is happening in global finance and what it means for your money. The next video is coming soon. Do not miss it.